With another escalation threat in the ongoing Iran talks, the economic fallout is spreading rapidly across the global economy. The United Nations has warned that the conflict has triggered a severe supply shock, slowing growth and increasing pressure on already fragile economies. Oil prices have surged from around $65 a barrel to well above $100 in just weeks, with analysts predicting a climb to over $140 if escalation continues. Business surveys from the United States, Europe and Japan are already showing slower activity, weaker confidence and rising input costs. The impact of the conflict is now moving far beyond oil markets and into everyday household expenses. Higher fuel prices are feeding directly into transport, food and utility costs, putting fresh pressure on consumers across the world. The sharp rise in fertilizer prices is emerging as a major concern. Prices of key inputs such as urea, sulfur and ammonia have surged as trade routes through the Gulf region remain disrupted. The United Nations warns this could reduce crop yields, increase food inflation and worsen food insecurity in the months ahead. Developing economies are expected to be hit the hardest. Growth in these countries is projected to remain well below pre-pandemic averages, while higher borrowing costs and rising debt repayments are limiting governments' ability to support vulnerable populations. Central banks are also facing a difficult challenge. Inflationary pressures are forcing many policymakers to delay interest rate cuts, even as economic growth weakens. That means households and businesses could continue to face higher borrowing costs for longer. The Iranian war is also accelerating deeper shifts in the global economy and global trade. The disruption of critical shipping routes is exposing the vulnerability of global supply chains that depend heavily on stable energy flows and low-cost transportation. Countries and multinational companies are now being forced to rethink supply routes, energy security and manufacturing strategies. The conflict is accelerating trends such as nearshoring, regionalization and the fragmentation of global trade into competing geopolitical blocs. The United States and Europe are attempting to secure critical supply chains linked to energy and strategic technologies, while China continues to expand its influence in sectors tied to the energy transition, including electric vehicles and solar manufacturing. The broader concern is that repeated geopolitical shocks are creating a more unstable and militarized global economic order. Economists warn that prolonged conflict, rising protectionism and energy insecurity could weaken global growth for years to come.